Professor. This is Elna Sarabadani Tafrishi. Today I will be presenting my project on JBS and its dual listing in 2025. I will explain the event and focus on how it impacted global capital markets. JBS is the world's largest protein company with operations in over 180 countries. In June 2025, the company became dual listed. Its shares now trade both in Brazil as BDRs and in the United States on the NYSE as Class A shares. This step aimed to expand the investor base, unlock shareholder value, and reduce the cost of capital. In this presentation, I will explain the event, shows JBS's financial background, and review how the capital markets reacted. About the company background, I should say JBS is a Brazilian company and the world's largest protein producer. It operates more than 250 factories across the globe and sells to over 180 countries. It is the global leader in beef, poultry, and prepared foods, and number 2 in pork. Because of this international scale, the company looked for a bigger and more global financial market like the NYSE. So what is dual listing? Dual listing means a company's shares are traded on more than one stock exchange at the same time. For JBS, investors in Brazil buy through BDRs, while in the US, shares are traded as Class A on the NYSE. To make this possible, JBS created two classes of shares. Class A with 1 vote per share and Class B with 10 votes per share, mostly kept by the original owners. Both share classes have the same economic rights. This system lets the owner keep control while still opening the company to more investors worldwide. In this timeline, we can see the main dates for this event. The story started on May 23rd when shareholders approved the dual listing proposal. On June 6th, JBS merged its shares. On June 9th, trading of JBS BDRs began in Brazil, and on June 10th and 11th, the ADS exchange converted the old shares into the new JBS shares. The key date was June 12th, when JBS Class A shares started trading on the NYSE. To support this, JBS created a holding company in the Netherlands for legal and tax reasons, kept the dual class share system, and used BDRs to comply with Brazilian rules. A conversion period until 2026 was also set, giving flexibility for investors. Overall, this event made JBS a global company with better access to capital, higher liquidity, and stronger visibility for international investors. Looking through the financial statement, we can see over the last 2 decades, JBS grew fast. Net revenues rose from only $2 billion in 2006 to more than $80 billion in 2025. Big acquisitions like Swift and Pilgrims helped this growth. EBITDA margins also improved. In the past, they were about 5%, but in the recent years, they are closer to 9%. Free cash flow sometimes went negative because of investments, but overall, company generated strong positive cash flow, especially in 2024 with $2.3 billion. According to Morningstar, in 2024, JBS reported a net income of 12.1 billion Brazilian real and total assets of 251 Brazilian real. This shows JBS was financially stronger before the dual listing. In this slide, there are recent financial results and also compared with the same period in 2024. In Q2 2025, JBS reported revenues of $21 billion, up from $19.3 billion a year earlier. Net income was $528 million, and earnings per share almost doubled to 48 cents. Net debt rose to $16.5 billion, but interest payments are still well covered. Cash flow was weaker this quarter, turning slightly negative, while EBITDA was $1.75 billion with an 8.4% margin. Even with these challenges, return on equity reached 25.7% and the return on invested capital 17%, showing that JBS is creating value for its shareholders. Now let's look at the capital market side. By listing on the NYSE, JBS becomes eligible for US indexes like the S&P 1500, Russell 3000, and MSCI All Cap. This is important because giant index funds such as BlackRock and Vanguard automatically buy shares of companies included in those indexes. This means more liquidity, more stability, and more visibility for JBS. In addition, the dual listing improves JBS's reputation in the bond market, which could reduce its borrowing costs in the long run. Here we can see how market reacted after JBS started trading on NYSE. In mid-June, the stock was about $13.80. In the first month, the price moved a lot and dropped to $12.9 as some investors sold early. From late July, the stock rose steadily and reached a peak of $16.5 in late August. In September, there was a small decline, but the stock stayed above $15.2. Overall, the stock gained about 14% between June and September. This shows investors reacted positively to JBS dual listing and believe it creates long-term value. In Brazil, the share price also rose strongly. Since July 2023, when the dual listing was first announced, the stock nearly doubled. News such as record revenues and SEC approval in March 2025 pushed the price higher. Analysts now expect the stock to pre-rate to around 43 Brazilian real, showing confidence in JBS's global expansion. To conclude, JBS's dual listing created new opportunities in global capital markets. It expanded the investor base, increased liquidity, and opened the door to index fund inflows. The strong performance of the stock in both Brazil and the US shows how the market value this move. Of course, risks remain, such as exchange rate changes and governance issues. But overall, the dual listing strengthens JBS's role as a global financial player. Here, these are my references, which brings me to the end of my presentation. Thank you very much, Professor, for your time and support. I really appreciate your guidance throughout this course.